Okay, so let us get started then. So welcome everybody. Thank you for coming in today. Good to see a lot of you. Okay, you can see we start with the thought of the day. Yeah, when the wrong people leave your life, the right things happen. Then there comes a time when you have to choose between turning the page or closing the book. So let's write that new book and many great chapters together. Many of you have been with me since the beginning, and some of you have come in a little bit later on. But it's all wonderful that we're all here together, and we will continue to grow together. Sam Seiden is also in the room with us today. He's the person that's taught us all everything we know, so we have to thank him too as well. Great seeing all of you. Okay, let us get going. We'll move on. Okay, the first thing we'll take a look at is the S&P. So you can see what we have come from. You see our plan has been working. The first level of demand that we've come into below the December lows rallied for 160 points, and now we have hit into the second demand. So all news does is drive prices faster. Are any of you taking these trades or still in these trades? These are trades that we've had previously inside of our sessions. Sam has talked you through this quite some time. And if any of you would like to share your risk and reward, could you please put in the chat so other people will know too how you're handling these type of movements? That would be great. Is everything good with that? Okay, so you can see how prices have rallied pretty strongly off today. We are actually limit up from our second demand zone. Yes, and we will definitely be using a trade station as well. Yeah. Okay, great. Yeah, we're just on the slide right now. And then we will be moving into the charts in a little bit. Okay. All right, great. All right, let's move into the Nasdaq. Nasdaq, you can see, has come off of our level of demand, and also is again limit up today from it as well. If any of you have taken any Nasdaq trades or taken in any stock, so not only can you just trade the futures in it, but you can definitely do it in the Qs. You could do it in actual stocks if it, prices come down into an area. And you can buy some stocks that have really been hit hard, and especially inside with the Nasdaq. So if any of you have taken any positions inside of there, if you want to share with that too as well. Okay, so you can see that the smart money leaves the footprints. And if you know what you're looking for, you're ready and prepared to take the buy. Can't really wait for the news. If you wait for the news, it's always going to be too late. Yesterday the markets rallied with the Federal Reserve announcing unlimited quantitative easing. They will purchase bonds and mortgage-backed securities. And that's where we put in our lows inside of the Nasdaq and the S&P down into our daily S&P and our weekly Nasdaq zones. So you can see how prices initially rallied. We've hit into, I'll bring up the charts in a second. We'll move on into now TradeStation. Okay, so everybody can see charts. Should be able to see charts, hear me fine, and there I also have support in the room, so don't worry if any question goes missed. There is also support here that's answering too as well. So okay, excellent. All right, so you can see yesterday that initial rally off of our demand zone took us up into a 60-minute zone, fell back down again, and now overnight we are rallying up again. The futures have climbed while, the global equities basically hit back into the 2016 lows. We have basically a risk appetite rebound, which is going on right now. Okay, so as we take a look at these markets, let's go into my other page here. So you can see at the current moment what we have. Prices are currently sitting at 2304. Right now, you can see the overnight high went into a limit up, which is coming in at 2333.50. Down below, you do have these three overnight 2-minute levels. This is coming in at 2298.25 down to 2289.50. The lower one at 2266.25, 2261.44. So you can see right here where we have a 2308.50. So we could possibly have a gap of where that demand zone is coming from at the 2240.19 to the 2183.65. We have previously come into this first little gap area supply zone. We fell to these lows down into demand. Up above, you can see this area, which is coming in closer to the 2765 to the 2806. This zone is coming in line with basically the 4-hour on the continuous chart. Okay. So you can see it's basically coming in right in line with this zone there, that upper zone. All right, so you can see that's an overall look of the S&P futures. A couple of things that did happen overnight. We did have yesterday more states that went into lockdown. UK also went into lockdown. However, you had other things that came out, such as the two areas in China where they've dropped to either 0 cases or they're going to reopen the original place where it started also soon. And Italy basically declined to a second day of less deaths basically. So in a way, it's giving people a bit of hope that's saying things are starting to come to an end. So you really can't wait for everything to just finish. Yesterday we also had that continued stimulus too. So a couple of things coming in, so it gave more hope for all of these markets. You can see too, really with yesterday, if you're saying, well, waiting for the news to react, when UK said that they're going to go into a lockdown, the DAX should have been the one that was, being weak. But you can see the DAX coming into a monthly, very nice rally off of the monthly. Right. And this would be the market that would be most affected if that were the case, that you're waiting for a movement because of weakness. And you can see now it has also created some demand zones on the way up. So you can see with the DAX, you have a area of demand coming in down below. All right, and you have a level of supply that's still up ahead. Okay, so there's plenty of money sitting on the sidelines waiting for these opportunities. They're not going to wait for the last person to get well before this all happens. So you can see that prices have started to rally. What can change things? I believe what can change things is if something should drastically change, overnight. So saying that whatever was getting better is not getting better, is actually getting worse. Then becomes a question of how much money is enough to get all of these things done. So then that would be a different story. But right now, as we're seeing things slowly progress, we're seeing some kind of light at the end of the tunnel, and we're getting some money put into the markets, quite a bit of money put into markets. And we didn't even have the other bill that was supposed to get passed through the House, where they're trying to look for another $2.5 trillion in economic stimulus plan to basically, force the lenders to grant temporary relief from mortgages, car payments, credit cards. And, the Fed also wants to help out small and mid-sized businesses. So that's still not even come out yet, but, people are willing to take the risks basically for the reason of people just getting better. Okay. Let's move on into, actually, I'll show the SPY pretty quickly too. SPY as well, more than likely we will have a gap that will be coming in at the 226.36 to the 218.87. All right. So as with the S&P futures, you can see very similar. The 4 hours on S&P futures, that will be that SPY zone coming up a little bit higher at the 276 to the 281. So I hope everything's okay there inside the chat. Like I said, it's a new environment for me today, so I have to look at the charts more. So hopefully, I know a lot of you can help each other out. And like I said, I also have support too as well. So, and as we go up above this area, really, if you take a look at the continuous chart, not a whole lot fresh in terms of supply areas until we get much higher to the 320.60 to the 326.30. So let's take a little look at the Nasdaq. Nasdaq, as we showed on the slide at the beginning, was coming off of a weekly demand. Yeah, it feels pretty good, right? Can use our platform. So you can see here too on the Nasdaq where coming off of our weekly demand. First, we'll move into also. All right, so you can see right here as well so limit up into, which has become our overnight high right now. So a lot of situations we like to use the overnight high and low for trap plays. So meaning, if it's a lot of times people want to buy above the overnight high, but people want to sell below the overnight low. However, limit up, limit down days, I don't consider them quite the same with it. I notice they can tend to run a little bit long, a little bit above the area. So for this, but you can see we are sitting at 73.59.50 on the limit up overnight high. We have a couple of 2-minute and 5-minute zones below current price. So you can see this 72.06.50 down to the 71.74. If you ever have an issue and know what contract we are on, you can take a look at either the watermark down below or the header up on top. Both of you are going to give you the Nasdaq continuous contract, and you can see it's a 5-minute, and you can see also 5-minute. So either way, if you ever have a question of what we're looking at. What's nice about this lower one, where you have these two 5-minute zones on top of each other, so you can see at this 69.16 to the 68.46, it is going to be a move below the previous close and a move below the overnight low, which can be a trap area below the overnight low. Okay. So one thing I do want to bring to your attention though, so same thing here on the upside for right now. You can see that this area of the gap was filled on the move back down. This upper zone at the 80.62 to the 81.71 is going to be closer to that 4-hour supply zone. Right? And then, of course, the 60-minute is going to be coming up where I see really the fresher area is coming up higher into the 86.51 to the 87.43. Now, remember with all of these, for any of you that are new, supply is above current price. Demand is below current price. For supply side, you want to put your sell at the area of the proximal line and with your stop above the distal line, and same thing with the buy down below. You want to put your buy at the area of the proximal line with your stop below the distal line. So just always remember that. Now, one thing interesting I do want to point out though with these, when I take a look at particularly into the Qs, so let's move into the Qs for this. So you can see here with the Qs, again, we should be a little bit gapped up at this 170.60. But you can see right down below, we're going to take it back. And you can see right below the low here, we have these two levels on, not quite on top of each other, but these two levels below the low. So you can see that's coming in at the 164.40 to the 163, and then down from the, wait, I have to see this a little bit bigger. 1 second. To the 163.98, and then 163.50 to the 163.03. So this will be actually below the yesterday's low. Okay. Okay, so, usually the equity indexes, it's, it's going to be more or less the same, so we don't have to go through all of them. I did look at YM a little bit, so we could take a quick look at YM. So you can see YM. Let's move to a 15-minute, I believe. She'll see. Now, so you can see down below where we gapped up from. Again, the overnight high was limit up. This was yesterday's high. So you can see that we have an overnight high coming in at 19,427 with the yesterday's high up at the 19,804. And now you can see we have this gap. You can see a gap a little bit higher from demand. That's coming in at 18,407. 18,562 to the 18,349. Okay. So for this rally, for the most part, most of you had a lot of things move together. You've had the metals move down, oil move down, equities move down. But what is the one thing that has been moving up while everything else has been moving down? With the metals, the issue with the metals is it's just basically the supply, the production of the supply really got hit. Having problems from Chile, Argentina, Peru. So everything's started to get hit, but they did like that Fed news, which started to bring gold prices back up. But if you take a look at what's the only market that's really been on a different move of everything, it has been, right? Bonds, can be a, yeah. The real main one is the dollar. Bonds, you can see too, we've lost a little bit of that inverse correlation. Right, typically where we would have a stock market, in an inverse direction of the bond market, we started to have some of that come in together because you can see with all of the different things that the Fed has been trying to do, you're trying to you're trying to move the stock market up, and then at the same time, you're trying to lower interest rates. So now we've lost that, connection where if you saw a lot of the days during last week, they're actually moving in the same direction. So a lot, I try to mention that where a lot of times I try to say that I come in and really take a look at it. And it's the same thing when you look at currencies too. When you look at currencies and you'll say, well, the dollar is made up a basket of the currencies, but yet sometimes if you take a look at every currency chart, they are completely different. Right, you'll have you'll have the Aussie look a lot different than the Swissy, or the Euro look different than the pound. You'll have one market making new lows, and you'll have another market that's skyrocketing, and you'll have a market such as the yen, which is more or less the safe haven. But what becomes the issue is their own economy comes into play. But right now, everybody has been focused a little bit more on the dollar. So that has been the main thing. And I'm bringing that up because that's why it's important for us to overall look at it. But let's look at the bonds before we move there. And we will move into... one other market I actually did want to show real quick was, if you take a look, so two markets where if you think about where everything started from, right, where this coronavirus really started from Asia to Europe to here, right? So if you take a look at that, and then you're taking a look at their markets, and then you're starting to see, okay, are we starting to see some recovery? Right? Are we finally starting to see some little bit of a light at the moment, right? And you can see you haven't seen the Nikkei. You have not seen the Nikkei. Right? Since this started, I mean, really it started last year, but markets were still holding high just in general. But really, when things started to progress quick, back in February, you can see you really have not seen this market attempting to, and then this really has been the largest move yet, because they are the ones that's showing signs that's going to be on the recovery first, right? So was a very quick move off of the lows here. So I would still expect some demand down at the 16,000. A newer area you can see is this 17,386 to 17,372. So a lot of you may not trade the Nikkei, a lot of you may not trade the DAX, but what's important at this current situation is that these markets are going to be a little bit of a leading indicator for you, just because as we start to get better around the world, they're going to start to show this movement, right? So if once Asia's starting to get better, Europe's starting to get better, we start to get better, and then the U.S. markets have been the strongest markets coming into all of this. So you can see the money will be willing to buy once we get even more continued rally off of these markets. So it's important to pay attention to some of these markets, especially at certain times, even if you don't trade it. All right, let's move to the bonds. We'll move into the 10-year. So all right, so the 10-year has continued to, so you can see here, we have rallied very nicely. So off of our demand zones coming into these bond markets. Currently, I'll show you where we are sitting at, and if we take a look at it, so this is more of the 10-year, but it does have some 30-minute demands down below. Let's see if I have it in here, or I'll move to the other page. Okay, so you can see right now you still do have some demand on the 30-minute down below. First one's coming in at the 136.24, 136.16. So at this current moment, 136.07, 135.29. What I would say about this is going to be more inverse to the stock market at the current moment, because you can see as the stock market is rallying today, we are having a fallback into the bonds. So you can treat it today as the inverse. So the best you could do with this is if we do come into a equity supply, then we're going to come into a bond demand. That will be your best inverse trade that you can do at the current moment. So right now, these levels are below. We're still creating actually the overnight. So don't forget with these overnight high and low, right now we're limit up into equity, so we're not going to make a new overnight high. But currently you can see we have an overnight low. It doesn't mean that prices can't get lower at the moment too. Now these charts here are a little bit more custom. And what these are custom of is that it's the day sessions of the bonds. So each one I do have day sessions for, but you can see this one is of the U.S. The U.S. actually came into its gap area coming in at the 185.32 to the 181.28.32, right? So we actually did come into a gap zone. Been here before, but you can see we did have a nice move into an area. Okay. Now you can see from there we have moved around the 177.1032. It does look like the 30-year did hit a little bit of demand yesterday, bounced up, but couldn't get past that supply. We have continued to move down. To me, it doesn't look like completely fresh demand down below. This one looks more like an overnight, not that great area. We did come down and hit the daily 50, did have a nice rally off of there. But you know, if I wanted to take an area of long in the bonds, I'd rather do it inside of the 10-year. This whole area, though, you can see has been, you know, just a lot of back and forth inside. So not showing a great movement out of this whole general larger zone that you can see where a lot of trading is going on in between. So not a great imbalance of supply demand inside of this overall area that we're seeing. Okay. Okay, so let's move to, like I said, with the metals. It has been weak just in general because of the global economy and how things have been moving with production. So the metals have really been hit pretty hard, but they did like yesterday's news with the Fed. And so as we go in and take a look at GC, so you can see GC has come all the way back up to 1700. A very strong rally off of continued move off of all the Fed. Now what we have is okay. So you can see down below, so this area you can see right below the overnight low is coming in at 1551 to 1540. Okay, it's a 15-minute demand below the overnight low. All right. And a little bit smaller, you can see right down in here, we do have in overnight smaller time frame area that's coming in at the 1612 to 1600. Actually, we actually formed a few more too as well. So you do have some overnight. You can see some 5-minute overnight demands. I believe this is a 2-minute overnight demand. So you do have some overnight demands that is formed on this way back up to the highs again. Okay. We will now go into crude oil. So crude oil, let's go into the bigger time frame. Yeah, and don't worry, if you put something in the chat I didn't see and I didn't get to it, you know, like I said, this is our first day in this environment. I'll try to go back and see if anything is missing. I will try to cover it next time. So don't feel like, you know, if you're just putting it in, it goes unnoticed. It will get noticed. So you can see here on the monthly, we are all the way back down to the lows in CL. You can see we have this drop base rally. Through this drop base rally, we had a very strong rally out of the zone and down to the previous lows. We have come into that zone and we have had a bounce off of that area. Now let's take a look at the now, oh, this one is gonna, you know what? I'm gonna let this, it's gonna need some time here. I'm gonna actually let this load. And I'm gonna go to the other charts while this loads. Maximize our time here. Okay, so you can see right now what we have is we are currently sitting at 23.99. Crude oil opens at 9 o'clock. So about 11 minutes. Go make this. So right now what we have here, so we had an overnight high, which, I mean, we should be fine. It's about 11 minutes unless it really bolts up over there within 11 minutes, but don't think so. Right now we have an overnight high coming in at 25.16. You can see you have these two little overnight 5-minute areas right above current price at the moment. And your overnight low is coming in at 23.18. So with that overnight low, you can see here if we have a gap up, right? If you have a gap up, that's going to be right at this area here, which is 22.73, 21.80. So meaning like if we now stay at the price we are at before the open, and then we have a gap up from that area, and this area will be below your overnight low. Thought I saw. Now you can see this area right here that I circled, and this zone coming in at the 27. What you'll see with that is this is going to be right in line with your gap. So I would pay attention to it just purely for that reason. So what you'll see here is you have this area. Well, it's probably better on the 30. Right, you can see right around this gap fills coming in right at that 27. That really goes up to that 28.36. That's going to come in line with that 15-minute, a little bit of a supply zone. This whole general area, you can see we've been in, quite some time. It's also an area that you can see where we've kind of just hung on to. We made the new lows. Now we're going to come back and test it. And then really the truly fresh areas are still up higher into the 45. But this is what we're dealing with at this current moment. And just want to watch out for new demand as we have fallen pretty low in most of these markets here. Okay. Let me go back to that page on the so you can see on this 240 area on crude oil, had to go way back, about like 17 years, I believe, or 18 years even, something of that sorts. They too are trying to, we're going to work out a deal, not a deal. But you can see too, so you can see too with this 2062 to 2037, this is the first gap that we've come into in crude. And the second one you can see is a little bit lower. That's coming in at 1986 to 1953. Okay. All right. We're going to take a look at the dollar. Like I said, the dollar has been the flight to safety. It's more heavily weighted by the euro. But you can see as the FOMC announced its new, 3 new credit facilities, along with plans to purchase commercial-backed mortgages. Prices have come into our EC demand and our S&P demand. So both of them kind of working together with it. So you can see right now with the dollar, this is currently what it looks like. We'll take a little bit bigger picture look too as well. And it is important because it affects so many of your markets. And right now has been a bit of an inverse also to your equity. So it is important to pay attention to it, even if you're not particularly trading equities. I mean, not particularly trading currencies. You should still pay attention to the overall dollar. I always say that, when I first started, it was always, everything's stocks, 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 because that's what CNBC basically, tells you about, which is very important because it does drive most of your markets. However, once you start to get more into things, you'll realize, you get into futures, you get into Forex, and you'll realize, well, everybody affects each other. Everything affects each other. And everything starts with certain points, right? So you can see here on the larger time frame with the dollar, coming off of some monthly demand, is hitting these previous highs right now. And also we have some fresh monthly supply up above current price too as well. When we're taking a look at the 240, this is what I see with it. So you can see on this 240, we've had a strong move into this zone, a very nice move out. We've come back into it at the 102.88 to the 103 with another move in so far. Higher up, we have up at the 103.27 to the 103.46. So on a new push higher would take us into this upper level. So currently what I'm watching is a couple of things with this. So those of you, I don't know if any of you were actually able to get into the euro demand that we'll go over in a little bit, but it did come into our 240 euro demand too as well. It's obvious that's in that trade, but you can see we did test this a few times. We have not broken through this lower demand yet. What I do see though, it has gone deeper into it. So one thing I was looking for is it would possibly going to form new supply. So at the current moment, since we didn't break through it, we didn't form it quite yet, but you can see that it did go deeper than in the morning. And then, of course, we have a little bit of a gap now that's going to come in closer to that 102.32, 102.59. So if you're in some longs, what you're trying to look for now is for prices to still be able to hold below the gap on the dollar and then start to break the demand down below. Because you can see on the 4-hour, the fresher demand is still a little bit lower, coming at 98.35. This area, you can have a little bit of a hold too, but you can see how prices kind of went down a little bit lower before moving back up. Okay. Now with that, we'll move to the euro. So you can see with the euro, I know some people may like to, I didn't check really the spot market with this, but if any of you are able to get it in either one of the markets, a lot of times, and you can see this is an area right below the gap, nice little trap play right below the gap, and also favorable with the news. And you can see now we have started to bounce. We have hit into, just as the dollar has hit into that 4-hour demand, we have also hit into a little bit of supply here. And you can see you do have these two areas. So, if you're trying to manage it, you got in a good price, you would have these two areas where you can move up your stop to try to protect some of your profits. To see if prices can move up closer. This one to me looks like it has been tested once if we really do get some good strength and a newly formed demand. The upper one, you can see we have not tested back yet, which is the 112090 to the 112629. Okay, take a look at AD. AD also benefiting a little bit off of the stock market rally and the metals rally. has come off of its lows. AD and BP are two markets which have made new lows and now attempting to find a little bit of a movement back up. So you can see right now we do have a we had this 4-hour supply. We have another one right up above. It will depend on where new demand forms though, but you can see this upper one much higher, which is the 65.42, 66.14. That area, we just barely, I wouldn't even say we even touched. We tried to come back and touch it, couldn't touch, and it continued to fall through with it. On the demand side, I think it was a 5-minute maybe. Yeah, on the demand side, you can see you have this 5-minute zone that's coming in at 58.45, 58.29. So like I said, these are smaller time frames within some markets that have fallen quite a bit and really do not have any larger time frame demand, but it is low risk given where it's gone to. And then the last one we'll take a look at is BP. Again, if the news was so bad yesterday where they said that the lockdowns were coming in, the DAX and the British pound should be the one that's falling to all new lows. But meanwhile, they're the ones that's rallying today. So you can see we had these three zones on top of each other. It hit each one, did have a rally out, but you can see this last zone at the extreme is the one that has continued to rally prices up a little bit higher. We still currently do have a these two 30-minute on top of each other, starting at the 12006 up to the 12092. I would watch out for this new area that's formed down below, though. You can see too, trying to be a little bit of a newly formed demand once prices start to break up a little bit higher as well. And of course, you got your higher time frame supply. Two on top of each other. That's coming in at the 122.54 to the 123.97. You can take a look at the price a little bit separated, a little bit better. Okay. So that's the markets I wanted to cover today. One other thing I wanted to show you that we'll try to bring up into next time. I created a bit of a workspace where if you ever wondered if how it moves around the world, right? How does it start? Which currency markets start, and which ones start to get things moving? How we start to move around the world? How we end up the day, and then how we start over again? Where do we have the highest trading times with these markets? Things are a little bit skewed these days because of the overall, the equity markets in general. But you can see we have some little different breaks, and so next time we can go into a little bit more on about these other charts too as well. All right, so that was my first day in this new environment, and hopefully guys and girls enjoyed this. Thank you all for showing up today, and I hope you all have a great trading day, and I hope to see you on Thursday. Bye all.